So Ehad, welcome very much to the channel. Thanks for agreeing to speak to us. I think it's going to be a very interesting discussion. And so let's start by you telling us a little bit about Ezdehar, who you are, how you came to be, where you're located, and what you do.
Okay, thank you, Gavin. So Ezdehar started in 2014, and I think we set up the firm because we saw a pretty interesting opportunity with all the changes that were happening in Egypt, and a new beginning, new starts, also governments that are serious about some macro reforms, also about the changes in the private equity market in Egypt. Also, there was a lot of transformation. Maybe some of the older, more established fund managers were not really continuing and raising new funds. So we thought there was a unique opportunity to set up an Egyptian mid-cap fund manager. On the one hand, we were seeing major reforms on the macro policy side, which we thought were very positive. Reforms in terms of subsidies, the devaluation of the currency, making it a lot more free currency versus strong peg. In addition to the gap in the market, especially in the mid-cap, we thought that there was an amazing opportunity to start setting up an Egyptian mid-cap private equity fund manager. And we started, and we launched the fundraising for our first fund in 2015, and we had the first close of our first fund September 2016.
Okay, thanks very much. Let's now turn to your LPs, your investors in the fund. So could you give us a broad description of who they are and what motivated them to invest into your particular fund?
Okay, obviously raising a private equity fund in Egypt back in 2014, 2015 was not the easiest thing to do. I think still Egypt was in the news, not always for good reasons. There was lots of transformation. You had to really believe in the long term. And maybe the track record also of private equity in Egypt in general maybe was not as exciting to invite investors. So basically, our most important investors, and I think they do play an amazing role throughout emerging markets and Africa specifically, are the DFIs, so the development finance institutions. And these institutions have the mandate to invest in economies like Egypt, in Africa, in developing economies, to help these economies set up and establish their private equity industries and grow them, and be having in the market more sophisticated product like private equity investment and so on. And that's why I think our initial target was to approach the DFIs. And so we were very happy that they were excited with our proposal. Obviously, discussing with them takes a lot of convincing because they really have to see the team, the track record, because private equity fund manager has a lot of, let's say, decision power. Once an investor signs, they have to really trust you with the decision. So we were really happy with the DFIs. So we have the European Bank for Reconstruction and Development as an initial cornerstone investor. They believed in us from the beginning. We have the European Investment Bank. We have FMO, which is the Dutch DFI. We have also CDC, which is the UK-based DFI. So that's, let's say, 70% of our money is coming from these DFIs. And also, we were very lucky to have about 30% of the funds coming from private individuals in Egypt. And that was really great because it was also a very good signal to the DFIs that there are Egyptian investors who believe in the Egyptian economy. That was also a very good signal. And also that believe in us as a capable team that is able to deliver good investments and good returns. So in addition to the DFIs, we had three investors that are Egyptian businessmen and women, actually, who believed in us and invested about 30% of the amount.
Okay, no, that's very interesting, particularly for a first-time fund. Let's talk now about your investment strategy. You're obviously a mid-cap firm, and you're in your initial stages. So you're based in Egypt. So tell us more about your investment strategy, geographically, sectorally, type of situation you're looking for.
Okay, so our first fund that we're about to complete, so we're going to be making the last investment within the next couple of weeks, and that will conclude the first fund, is focused on Egypt, purely Egypt. The second fund that we're currently raising will probably have a small component outside of Egypt, but still, I think our major focus is Egypt and companies more or less related to Egypt. So even if we have a small allocation outside, it will still be linked to an Egyptian strategy. So either an African company wants to invest in Egypt or vice versa. So our most important focus is Egypt. And I think this is our strength. The team is all Egyptians. We know the country quite well. We can source deals. We can be close to the companies and be able to add value. And so our strategy is focused in terms of geography. Egypt, in terms of what we're looking for, is the most important thing we're looking for is a sponsor that is or can be aligned with us fully. I think that's the most important thing that we're looking for. And I will talk about this a bit later, but I think we obviously have the typical sectors that most private equities look at. So we are excited by education, by consumer goods, building material, financial services, manufacturing. There's lots of sectors that are quite exciting and that are growing in Egypt, also based on the growth of the population, the growth of the economy, the major spend in infrastructure. So all of that is exciting us. We don't do longer term projects such as infrastructure or real estate, things of that sort. But going back to, I think, our most important criteria for investing is really the alignment with the sponsor, with the owner of the business. Most of the investments we make are with entrepreneurs or family-owned businesses, and they come with their own sets of challenges. And I think the most important factor for us is to make sure that we see eye to eye with our partner, so we know the situation that we're in now. We've studied it carefully. We know what needs to be done. Okay, so we are a pretty hands-on investor, and we take hands-on very seriously. We'll talk about that, I think, a bit later. But our value add and input in the company is extremely important, because that, from our perspective, what really guarantees to a certain extent the outcome. You know? So if we have an agreement with the sponsor, with the owner, and we see eye to eye, and we have a plan, what we need to execute over the next 3, 4, 5 years, while we are investors together, I think that's for us one of the key points that we make sure that we have aligned to and agreed to before we start.
Let's turn now to let's go more into the more technical aspects now of private equity, which is of great interest. So let's sort of walk along the chain of the value created in a private equity investment. So let's start with sourcing. So how do you generate a pipeline of opportunities? What is your sourcing strategy? Is it personal connections? Do you have a methodology?
Okay, that's a very good question. And that's something that evolves with time, because imagine when we started in 2014, 2015, and we went to the market, and obviously we didn't have the funds yet, and no one knew the name of Ezdehar, and we're trying to source deals. So we go talk to people and tell them, this is Ezdehar, we're a fund manager. You know, there was not much there. So it requires a lot of faith from us and from the sponsors. So back then, we've tried everything. So we spoke to investment banks. We did a lot of discussions with trade associations, with things like the American Chamber and associations of the sort. You know, as we progressed, I think the brand has become important. So if let's say if we the source is multiple channels. So us doing cold calls. We actually did that at the beginning. Lots of cold calling. You know, we know of companies. We call them up. You know, are you guys interested? Another channel is really doing research. So we look at specific sectors. This sector is exciting to us, or let's say these are the top 3-4 sectors that we would like to focus on. So we assign team members to focus on these sectors, find out within these sectors what's exciting, and then we approach these companies and talk to them. And obviously, at the other extreme is discussing with investment bankers and make sure that they know of us and they know what we do and they know that we are available in the market and so on. So in the beginning, there was a lot of our own research and cold calling. Now I think we've done a pretty good job at the beginning of also making ourselves known in the market. And so after, let's say, 5-6 years now of being in the market, we see that it's a bit reversed. So I think we've built a good reputation. And now a lot of people come and talk to us either through investment banks or directly because of the niche we've created. I think we created that niche and brand that says, if you really want not just investment for your firm, but if you need a partner that has a real operations background, that understands how you operate, we can help you. So people come, and you mentioned right now, succession planning. So if you need help with the succession plan, if you need help to make sure that the company is real corporate with the right governance, with the right systems, with the right staff. If you want to IPO, we've become a go-to firm. Actually, one of the deals we've done was that, a firm was talking to a regional player, and they thought that they ended the discussion with them and they came to talk to us because we were on the ground and we've done a lot of transactions. So they thought that we can help them because they needed someone to be close to them and help them through that transition from a family business to a proper corporate with the aim of IPO the company in 2 to 3 years.
Let's now talk about screening. So you identify a deal through whatever sourcing strategy you have in place, and then you get to the point saying, well, we've had this initial meeting, we've had an initial look. How do you screen so that you get to the point where it's really worth investing the time to try and pursue a deal? Do you have a screening process? What are your criteria?
Yes, we do have a process. So whenever we have a transaction coming in, we create immediately what is called the screening memo. The screening memo, the investment professional writes a little summary about the company itself and everything that person knows about the transaction. So the company, the sponsors want to exit or want to have capital increase, whatever the rationale of the transaction. And also that person puts in that very short one-page memo anything we know about the industry from what we've seen before. So the industry is exciting, it's growing, it's not exciting, and so on. So that's kind of the first thing. Once this happened, we spend some time discussing and getting into the details of the transaction because there are many moving parts. There's the sector we have to really understand. There's the company, there's the sponsors with their motivation, the nature of the transaction, and so on. So we spend some time trying to spend time either with the investment banker, but hopefully with the owners and the senior management to try to form a view on the company. And the criteria that we get for, obviously, the sector needs to be growing and exciting and so on. But more importantly, the company itself, its track record, understanding what is its value. We break it down into really simple questions. One of the simple questions is how do they make money? Because sometimes companies do not really know. They just grow organically without too much thinking. But what is really their edge and how do they make money? And then we spend some time talking about the plans and see if we can see eye to eye in terms of the plan. And once that comes, that pool of knowledge is discussed with the team. And then we try to figure out, the questions. Is this the market exciting? Is the business plan aggressive and the sponsors are interested really to grow the firm? So it's not just like your average 10-5% growth. No, there is really a target. We want to double and triple the size of the company because we have some ideas. The need for us as a value-adding partner, and most importantly, the willingness to listen and adapt. So, for example, if we find gaps in the management, are these guys willing to add the required team members to make sure that we achieve the plan? And obviously the return, because we're financial investors. Our investors, even the DFIs, are very focused on financial returns. So at the end also, it needs to make money. We need to have and to hit our target return. So all of that comes together in a team discussion. And then we decide if we take it further or not, based on returns, based on the alignment with the investors, the sponsors, based on the targets and growth, based on the sector. These are kind of the criteria. So I think the most important one for us is really seeing eye to eye with the family. I guess that's really key for us. And then once this gate is passed, we do the typical private equity thing. So we sign some kind of a non-binding offer, and then we enter into due diligence and so on. But I think if we're going to talk about that a bit later, that's fine. So the typical negotiations around the valuation, due diligence, negotiations around the transaction, legal agreements, and so on. Yeah.
Okay, that's a great, very interesting screening process. So let's talk now about negotiation. So you've decided you're going to pursue it. You're building relations with the founders, the sponsors, the entrepreneur. So what's your style? What's your approach to negotiation? What are you trying to achieve? How do you manage relations? What kind of relationship going forwards are you trying to build together?
I think that's the most important question for us, and that's that building relationship together, and we don't spare any effort to do that. And the reason is that we've learned also, we have a quarterly offsite where the team gathers and we try to figure out what are the lessons learned. And this is definitely one of the most important lessons, is that to spend as much time as possible before the deal to make sure that we're aligned with the sponsors and the owners. And so our negotiation and our interaction at this phase is crucial for us. And we don't spare effort, we share a lot. So in most cases, for example, at this initial stage, we bring in commercial advisors or consultants that give us a view on the market, that give us a view on the performance of the company from a commercial perspective, and give us a view on the business plan. So, and we share that information with the sponsors, with the owners. And so the negotiations become a lot more, sharing information, sharing where we come from, rather than this is my view of the value and this is your view of the value. And actually, as we speak today, we have just spent like the past 2 to 3 months with the company developing a business plan, and we had different views. And at the end, we converge. This is our view of the future. This is your view. How we can bridge that gap. It's something that is very objective. It's not something that I think the multiple is 8, and he says I think it's 9 or 10. And it becomes kind of an empty discussion. Try to really focus on this is the business plan, this is what our view on the valuation. We try to share as much as possible, even in terms of the terms. We've also learned to put in the initial non-binding offer as much of the terms as possible that we think are important, so we don't have a problem later on. So for example, exit for us obviously is important. Some kind of control is important. Having a say in the management team and the hiring and the compensation of the team is important for us. So some of the things are important. So we've learned to put that at the beginning. This is our style as a fund manager. This is how we add value. This is how we can help you. So we've learned to put that also at the beginning and not to wait at the end when it's kind of too late. So in terms of negotiations, we try to put everything as transparently as possible from the start as possible, and share as much knowledge as we know from the beginning, so that negotiations become a lot more factual, rather than taking sides and hiding things and trying to have a poker negotiations. It's totally the opposite. We want to be partners with these guys for a few years. Let's start sharing from the beginning as much as possible.
Okay, that's great. So focusing on common interests rather than artificial negotiating positions. I understand that. So let's say you've now concluded a deal. Let's say you've now concluded a deal with an entrepreneur, and you go into the company. People sometimes talk about 100-day plans. So what is your approach to adding value? What areas do you actually intervene in? There's obviously governance. There may be other things like buy and build. So what areas do you add value, and how do you organize yourselves?
Okay, I think, yes, we have, it's not called a 100-day plan, because I think the 100 days might be a bit artificial. Sometimes it works for some companies, sometimes they need a lot more time. So we create something called a post-investment plan. And that plan is created based on the interactions that we just mentioned from the beginning, where we have spent the time together, we have an objective. So we know what we want to do. We want to maybe do acquisitions, or we want to target a new segment, or we want to add more products, or we want to hire more staff to do more things. So that comes from the discussions we have with the team at the beginning. Plus, all what comes from the due diligence. So there might be some things that need to be improved in the financial management, in reporting, in the IT infrastructure, in governance. That's also a key issue. In ESG related matters. So there's a lot of employee related work streams that we might implement, like maybe having a more clear system for bonuses and promotions, and maybe adding medical insurance and so on. So all of that is put into a plan, and that plan we religiously follow with the company and the owners over our whole tenure of the firm. So it might be broken down into, so we start with like a high level plan, 5-year plan. We bring that down to like yearly budgets, and these yearly budgets are cascaded to quarterly results. So actually we create quarterly targets for the firm over 5 years. And this is how we follow up with the team. So that involvement then becomes the follow-up of this plan. So we do that through board membership. So either we ourselves are board members, or we invite external experts to serve on the boards of these firms with us. They complement us in terms of technical knowledge in the specific field of the company. We attend management meetings, sometimes on a weekly basis, sometimes 2 times a month, sometimes a month. It depends on the pace and what we want to achieve. Sometimes we have sub-teams that follow up on something specific that we want to really have a great impact on. Sometimes it's hiring, for example. So we create a small team, and the target of the team is within like 3 months, hire the most important 3-4 team members that are missing for the firm. And sometimes we go to the extreme of having one of our team members spend time in the company. And that we've realized is very useful. So sometimes we send one of our team members to spend 3-4 months within the firm to act as a program director of all these initiatives of this post-investment plan to make sure that we achieve that. So there's all these multiple points. And maybe the guiding line of sight is this scaling up framework that we create, where we have like maybe once every month or 2 months, this high-level meeting with the owners and the senior management team to review the performance, to review our targets, to realign and readjust and so on. So this creates the framework that we follow up over the 5 years, and then based on that framework, there is the board membership, the management meetings, what we call embedding. The word is not very appealing, but we put one of the team members inside to make sure that this whole thing is performed well. So that's overall the plan. There's lots of details, obviously, regarding helping with hiring, helping with M&A, and so on and so forth. But let's say this is the general framework of our involvement in the firm.
Let's turn now. This value addition plan obviously is where a lot of the value is created in the portfolio. It's a challenging task. So how do you go about organizing your resources? You obviously got senior investment officers such as yourself. You've got analysts. You may have external operating partners, experts. How do you manage, develop, and configure your internal resources so that you can execute value addition plans on portfolio companies?
Okay, resource planning is very important. We do that every also few months. We sit down and reallocate and so on. But I think there's a few key points. First of all, the level of involvement when we start an investment is not the same as when we're about to exit. I think at the beginning, there's a lot more heavy lifting. There's a lot more involvement. So the workload that is required from the team that is doing the transaction at the beginning is quite high. And as things progress, things fall into place. It's at the beginning where you need to hire new people. That takes a lot of effort and time. Once the team members of the management company is complete, then that takes a lot of load from you. Once we set the strategy, when we set the KPI, once we create a lot of the basic stuff in terms of governance, there's this. Once you establish the rhythm of the board meetings, when you establish the rhythm of the management meetings, you realize that maybe if in the beginning you have an effort of 100%, after a year that goes down to 50%, after 2 to 3 years it goes to the maintenance of maybe 10-20%, and the process functions. So this is how it's managed. So obviously, as a fund manager, we do like maybe 2 transactions per year, sometimes a bit more, sometimes a bit less. So that works perfectly. We have the teams then to really focus at the beginning with a company, and as time progresses, the company is a bit more independent and the team can focus on doing something else. So this is one thing we do. The second thing is that we make sure we have teams that tackle these companies that are really complementary. So we always have someone that is a bit more senior, with team members that is a bit more junior. We have people with more financial background and people with more operations background. And that also complementarity creates a lot of efficiencies where people divide things among themselves. So this is how we make it, to make sure that we have the proper resourcing for properly helping the teams.
So now you've been managing the portfolio and you've created some value. So what is your approach to exit strategy? Because obviously, historically in emerging markets, exits have been more difficult to do. So do you have a specific exit strategy in mind when you invest? And how do you see exits going in the Egyptian market in the near future?
So our initial thesis is that Egypt is becoming more exciting as a private equity destination. And we've seen that evolution. So maybe 5-10 years ago, you will find very few global or regional or African PE firms looking at Egypt. Now that has changed. So you will find over the past 5 years, several African, regional, and even global PE firms looking at the country. And that's a positive change versus what was happening a few years ago. But that change means also that the nature of most of these PE firms is that they are larger firms and they are looking at transactions that are maybe $50 million, $100 million, and so on, 50, 60, 80, and so on. Hence our thesis, which is, we can take these family businesses, improve them, and make them more attractive to these bigger and more regional or African or global firms. And this is how it's functioning. This is, I think, a big part of the thesis, is taking these family businesses, making them better suited for larger investors. So that's, I think, a key exit for us, is these larger regional PE firms or bigger private equity players that could be excited to look at Egypt, and they've done things in Egypt and so on. And actually, part of our exits are realized with this. So I think that's a major source of exits. The other one, obviously, is IPOs. We haven't done any IPOs yet. We definitely have a plan for a couple in the next couple of years. And I think that also would be a pretty good avenue for exits. In some cases, also some strategic investors. That's a bit difficult because a lot of the maybe global strategic still have a questionable view on the country. They need to see maybe more stability, more. So we think in the future that will become maybe a better exit option. For the time being, I think the focus will be probably larger private equity firms and hopefully IPO within the next couple of years.
I'd like to ask you another question about the Egyptian private equity market, but I'd like to ask you the question from the point of view of a private equity professional. Do you think there's enough private equity professionals to cover the Egyptian market? And how do you see the supply of private equity expertise coming on stream in Egypt? Is there enough of it? Is it developing? Is there more required?
No, I think there is more required for sure. I can tell you that the team that we have, for example, there is my partner who used to be with Carlyle. I set up a PE fund before that, an African-based PE fund in London, where I learned the tricks of the trade fund. guys who were ex-Sinvin and Doughty Hanson and Helios and so on. My partner, Amir, is from Carlisle. But the rest of the team does not come from a private equity background. And so we spend time with the education and the process and so on. People coming from consulting background, operations, investment banking, asset management, there's a bit of everything. So that's a clear indication that the market still needs development. There's, from our perspective, yes, there's a lot more that needs to be done in having private equity professionals that are properly trained and educated in private equity. There's still a big gap here.
Okay, let's finish up with our last question, which is, what are the future plans for Ezdehar? Is it to do, you've obviously got into your second fund, so is it to do more of the same? Are you planning to get into bigger funds? Will you gradually go a bit more regional? What is your sort of plan for the next 5 years?
Yes, so we started with the second fund to have a portion allocated outside Egypt. So starting with a small, let's say, geographic allocation. That I think will probably continue. I think Egypt could be a very good base to have a fund that is more regional. Hopefully, I hope that in the next few years, the region is a bit better, more stable, and so on, and there's going to be a lot more to do. Africa is developing, and I think there's also a lot of excitement in Africa. Even the Middle East, part of what we see currently, we see a lot of young entrepreneurs who are better educated, who have aspired to more, who are based in Saudi, in Jordan. So there's, I think, a lot more happening in our region. And I think over the next few years, there might be room to grow regionally, that's for sure. We're also considering slightly different asset classes. So we might go a bit into earlier stage because we still see a big gap in deals that are requiring $1, $2, $3 million of investments. These guys are left homeless, they have nothing, nowhere to go. And there's a lot of these interesting transactions, mostly young entrepreneurs who started companies a few years ago. They're profitable, they're growing, but they have no way to get funding. There are no really VC and no private equity. There's still a gap here. So you might do that. There's also thinking about some kind of an impact initiative and so on. I think lots of people talk about impact, and I'm not sure myself what the definition is, but I think we'll come up with our own definition, and there's a lot to be done actually also in the country in that space as well. So maybe geography expansion, a bit earlier stage, impact, and we're also thinking about VC somehow, but that's still early stage. So every couple of years we kind of regroup and readjust, but we have lots of plans over the next few years.
Well, that's so exciting that there seems to be no limit to the amount of opportunities available to you, and it's just a question of prioritizing and resources. So I'm very glad that you have such a great chance to be in Egypt in this current time. So thank you very much, Ahmad, for the very, very interesting talk.